going to get started. Welcome to the Committee for Better Banks briefing. Stressed out at Wells Fargo. Updates from frontline bank workers. For those of you who are new, the Committee for Better Banks unites bank workers so that we can improve working conditions, raise standards, and generally make banks better for everyone. Hi, my name is Jessie McCool. I'm a compliance senior associate for Wells Fargo's Wealth and Investment Management division, and I'm based out of St. Louis, Missouri, and I've been at Wells Fargo for about 8 years. Whatever your role is, teller, universal banker, underwriter, customer service rep, or an IT, just to name a few, frontline bank workers face stress every day that harms our mental and physical health. We decided to host this webinar and tell our stories because we want to encourage more bank workers, like many of you watching, whether you work at Wells Fargo or at another bank, to come forward and join so that we can make a positive change. Halfway through our presentation, we're going to take a quick poll to what makes you all as bank workers stressed out at your work. And after the four of us have shared our stories, there'll also be an opportunity for you to ask us questions. As a reminder, to do that, just click on the question and answer function at the bottom of your Zoom screen and type in your question. Stress comes in many forms working at Wells Fargo. And since I started, I'll share mine first. As somebody who's 5 steps down from CEO Charlie Scharf, I know that discrimination and employee scapegoating truly starts at the top, creating a toxic culture for all workers. Part of my job involves reviewing and improving communications with the public to ensure that they meet regulatory standards. Last year in 2020, Wells Fargo restructured the Wealth and Investment Management division where I work. This division includes both bank and brokerage lines of business, and there's a required regulatory separation between the bank and the broker-dealer. Think of it this way. Bank employees cannot offer brokerage products and services, and nor can brokerage employees offer bank products and services. For example, if a banker was telling you something, they would not be able to use the language of broker-dealers with customers or in official documents and vice versa. It's important to note that these are separate jobs and separate roles. Earlier this year, I was reviewing a series of websites sent to me from the broker-dealer. As an employee of the bank, I was receiving these because financial advisors within the broker-dealer were making offers of bank products and services using the same standardized language. I flagged this for my manager, and we quickly came to realize that the language originated from a flagship brochure. I had reviewed this brochure before it was published, but the required changes were never incorporated, and the brochure was approved anyways. In trying to figure out what happened, I noticed a notation from a senior vice president within my team who did not send the review to me and indicated that I had reviewed it and approved it under a different previous submission. A different compliance officer was attached, completed the review from the broker-dealer perspective, and approved the non-compliant bank language. Let me be clear here. The other compliance officer who the senior vice president passed this to has different expertise than me. I'm confident that the senior vice president knew this compliance officer would not catch this error because it's not part of their regular role or duties. When my manager and I reached out to the senior vice president to flag the mistake in the brochure, senior vice president set up a meeting with us another senior vice president on the team, and the other compliance officer who missed the non-compliant language. I thought that the call's purpose was to discuss how to compliantly delineate the products and services offered through the broker-dealer versus those offered through the bank within this brochure. Instead, both of the SVPs spent the entire time attacking the other compliance officer, asking her how she didn't catch the mistake and blaming her for this error to the point that she was in tears. This was the first of 2 calls where this happened. The other compliance officer and I were the only 2 women on these calls. I'm not surprised that this happened. It's part of the toxic culture at Wells Fargo, using other employees, most often women and people of color, as scapegoats. As a woman at Wells Fargo, I've experienced discrimination countless times. In my first interview at the bank, the interviewer told me that he was excited that I checked off the diversity box as he had access to my complete demographic information. But I don't work at Wells Fargo because I check a box. I work at Wells Fargo because I'm a subject matter expert in compliance and regulation, and because the bank needs employees like me who are willing to hold the bank accountable after years of scapegoating employees and harming customers. That's why I joined the Committee for Better Banks, because I know that together we can make a better Wells Fargo. Let me turn it over to our next speaker, my colleague, Juan Sanchez.
Thank you, Jesse. My name is Juan Sanchez. I've worked for Wells Fargo for 9 years at a call center in Lubbock, Texas. I work in the global remittance team where we help customers transfer funds from their bank accounts in the U.S. to their friends and family in other countries, mainly in Latin America. At my call center, we regularly deal with changing and inconsistent policies that make it difficult for us to navigate our work life, balance, and do our work effectively, all while being constantly monitored by management. On the best of days, bank jobs are stressful. But if you have to also deal with the health issue, then that level of stress can skyrocket. This past year, I had to go on medical leave to get surgery on my leg. Since coming back to work, I've had numerous doctors and physical therapy appointments that I had to cancel because my PTO wasn't approved, even though I had sufficient PTO days available and requested a PTO months in advance. At times, my manager has told me that work was too busy, so I wasn't approved to leave. I know this wasn't true. We've been experiencing a lag in customer calls for months, to a point where upper management has been telling us to use our spare time to practice our call scripts. So instead of using my PTO for doctor appointments, rehab, or when my kids are homesick, I've been forced to take occurrences, which is when we are forced to take unscheduled time off without getting prior approval from our supervisors. We used to be allotted 6 occurrences over 6 months. In January, with no warning, they changed this policy. Now we only have 6 occurrences for the whole year. If we need to take more than 6 occurrences, we risk being fired. These policy changes and inconsistencies are difficult for everyone, but especially for parents in the office like me who have young children at home. On top of these changing policies, management is also constantly monitoring us, specifically through metrics known as adherence and accountability. For adherence, we have to make sure we take our breaks right on time. If my lunch break is scheduled for 11 a.m., but I don't actually take my lunch until 11:15 because I'm on a call with the customer that runs past 11 a.m., that will result in a mark that lowers my monthly adherence score. For accountability, we have to meet a certain number of minutes on call each day. Management's monitoring us so excessive that sometimes if I have to use the bathroom for 3 minutes during my shift, I come back to a message from my manager asking, where I was. It's dehumanizing. If we don't meet our adherence and accountability goals, we don't get our quarterly bonus, even if we received high customer satisfaction scores. Meanwhile, over the past 2 years, even if we meet our adherence, accountability goals, and receive strong customer reviews, it didn't impact our raises. My last annual raise was only 27 cents, a 1.5% increase. Each of my colleagues in the same position as me received the same. We're all working hard, meeting our goals, and yet we're receiving the same 27-cent raise. It's incredibly discouraging, especially with Wells Fargo announcement that it's doubling its payout to shareholders. If the bank can afford to boost its dividend and spend $18 billion in stock buybacks, then it can afford to pay its essential workers livable wages. I joined the Committee for Better Banks because I want frontline workers like me to be treated fairly and with respect. That means being trusted in my job and being paid good wages with reasonable benefits. Okay, before I turn over to my next speaker, we want to take a quick poll to find out what stresses you out at work. You should be able to see the poll now. Please take a moment to answer this 3-question poll, and we'll announce the results later in the program. Our next speaker is my coworker, Emily Gillis.
Thanks, Juan and Jesse. Hi, my name is Emily Gillis. I'm a premier phone banker at Wells Fargo's Boise, Idaho call center. And I've been with the bank for almost 3 years now. The stress from working at Wells Fargo takes a toll on our mental health. Similar to Juan, I've also experienced Wells Fargo's constant monitoring of employees. Not only does this make our jobs more difficult, but it's also harmful to our customers. In my call center, the most amount of time we're supposed to spend on the phone with a customer is 300 seconds. But in my role, I work with customers who have a higher amount of money in the bank. This typically means that they're on the older side. And a lot of my job is doing online servicing for them, walking them through Wells Fargo's website and making sure they know how to use the site effectively. When I'm on the phone with these customers, trying to help them and meet my time goal, I also have to deal with my manager pinging me, asking me why the call is taking so long, asking me, are you doing this? Are you doing that? Not only does this make it harder to manage, focus on meeting the customer's needs, but it also makes the call run much longer. I do understand middle management has goals they need to meet, just like we do, but it doesn't make things move faster if we're bombarded with messages about how long our call is taking while we're speaking with customers. Instead of focusing on surveilling us, Wells Fargo managers could care more about the feedback that we receive and share from comments. I regularly earn strong customer satisfaction numbers because I listen to what my customers need and do my best to help them with their finances and Wells Fargo's various banking systems. Customers often tell me which online features they like, which ones they don't like, and their concerns when an easy-to-use feature is being phased out. In the past, I've tried to explain to management customers' concerns with Wells Fargo removing these seamless online features. They just continue to ignore our comments, which come directly from the customers. So Wells Fargo tells me that my job is to help customers meet their goals, but it's hard to help my customers when our voices aren't being heard. So I understand time is a valuable resource, but is it really more valuable than customer support? I think it would be more effective to have a system in place where we can voice our concerns to management on a regular basis to make better changes for our customers. A lot of bank workers don't realize we have a right to unionize, but we do, and it's time management heard our voices. That's why I joined the Committee for Better Banks, because I know how essential we are in keeping the banks running and maintaining customer satisfaction. I know we can change banks for the better, and I want to be part of that change. Now I'm going to turn it over to our last presenter, my coworker, Rena Abrahamson.
You're on mute.
I'm so sorry about that. Let's try this again. Thank you, Emily, Juan, and Jesse. Those were really. My name is Raina Abrahamson. I'm a credit card customer service specialist in Wells Fargo's Salem, Oregon call center, and have been with the bank for about 4 years. As a trans woman, I am terrified that my health benefits or healthcare costs are going to drive me into bankruptcy. Wells Fargo's poor healthcare options and benefits and unlivable wages do not protect me from emergencies. Last year, after a personal injury sent me to the emergency room for a whole 4 stitches, a campaign in order to pay off my medical bill. That's despite the fact that I already pay a minimum of $1,600 annually for my deductible. My take home after taxes and benefits is less than $25,000 a year. So with healthcare costs, my husband and I live paycheck to paycheck. In fact, during the pandemic, I took on a second job delivering food to try and earn some extra money. I can't imagine how my friends and colleagues at Wells Fargo who have kids and dependents can get by on this. Incredibly discouraging, as Juan stated earlier, especially with Wells Fargo doubling its payout to shareholders. They, their basis that they can afford to boost its dividends, but they're not willing to take care of their workers and their essential workers. As a trans woman, I'm deeply disheartened also that Wells Fargo touts its celebration and support of the LGBTQ employees, but it only covers about 50% of the cost of essential gender confirming surgeries, which can cost as much as $40,000. If Wells Fargo wants to demonstrate it cares about its LGBTQ workers, paying enough to survive and taking care of our health is the least that the bank can do. And to add insult to injury, when I returned back to the job in June, all of my online files, profiles, everything were under my dead name, which is the name I was assigned at birth that I no longer identify with, and legally changed. This resulted in our trainer overseeing the class that I was sitting in with. My profiles got rebuilt using my dead name in a Zoom meeting, which outed to an entire class of new hires, none of which I'd ever met before. It took weeks for Wells Fargo to fix this, even though I'd worked with management a year ago when I changed my name legally. It's painful and stressful to not be recognized as who I am in my work. Banks like Wells Fargo have a responsibility to treat all of its employees fairly. If you want to find out how you get involved with the CBB to make change, you can get started by joining our CBB Facebook group. Fill out the form on our website, or simply email us at staff@betterbanks.org. And now, before we get to our questions, we have results of the poll. So first, 100% of you responded that you are stressed out at work. And the top 3 issues that people want changed are wages, job security, and favoritism by managers. And lastly, 88% agreed that workers deserve a stronger voice. Thank you to everyone who answered our poll. And we'll kick it off to questions now. If we have any questions. Okay, so one of the questions we have here is, what are some ways that bankers can get involved with be that's going to be reaching out to our Facebook, contacting the filling out the form on our website. You can give us an email at staff@betterbanks.org. And we have another question here from Jill. I butchered your name. Is anybody here a retail branch worker? I believe we are all call centers, except maybe Jessie, who's muted, so we can't hear her.
Yeah, no, yeah, I'm definitely I'm not a retail client-facing branch worker, but our group overall definitely has retail branch workers within it.
Absolutely. We do have retail branch workers in the CBB, just none of them were able to make it to this panel. Another question here. In terms of metrics changing during COVID, we mentioned adherence and accountability. Are there other metrics that have changed? Emily, do you want to answer this one?
I'm trying to think off the top of my head. There's always things changing at a call center. It's hard to pin down what exactly is changing due to COVID. Short answer, not really that I know of, but there's always things changing. So I don't really have a good answer for that question, sorry.
No worries.
I can answer some of that. I know what I noticed before I left on my medical leave, our adherence was a little more laid back. They took to account, okay, you took a long call, your lunch was at 12, you got off at 12:15. As long as you took a 30-minute lunch, it didn't affect your adherence because you stayed within the 30 minutes, you stayed within your 15-minute breaks. When I returned, that's where the changes were made, that it didn't matter if you took your lunch, a 30-minute lunch. If you didn't take it at the appointed scheduled time, then it affected it. And I've had cases where I've gotten an email saying, why was your adherence low? And I would always go back, well, my lunch, I took 30 minutes or 45 minutes late because of a call. That's why and if you miss 2 of your breaks late, it can throw off your whole day adherence.
My manager will send me Excel spreadsheets of, you logged out for 2 minutes 3 weeks ago. What were you doing that time? It's like, I don't remember.
It was 3 weeks ago. You slept since then.
Yeah. Sorry, that was just, I didn't mean to interrupt.
And I just off the top of my head, I know that my situation is a little bit different because I'm in one of these office jobs and not in a retail branch or in a contact center, but I'm in Missouri, and I'm sure as many of you have heard, we have low vaccination rates and high COVID rates, whether we're talking about regular COVID or the Delta variant. Some people at our St. Louis location are not able to work directly from home, so they have to go in. Now, maybe their managers are working from home or something like that. And what happens when those people either move on to a new role at another firm or, they leave, retire, what have you? Well, I had 2 friends, and one was 2 down from Charlie Scharf and another was 3. And they both left for new roles at other firms because some of the issues that we're all experiencing. And when it came time to go collect stuff from, their offices or their desks, they followed the stated procedure, which was you check with your manager, they will give you time to come in. At the end of the day, our corporate properties group will run the click-in, from our click-in cards, and we'll report back to your manager and verify that you were supposed to be there. Well, That worked just fine for those two people. Approximately a month later, another friend actually retired, so a happy moment. This person attempted to follow the same procedure, had some issues with the same senior vice presidents that I talked about, and has had to get a lawyer involved in order to enter the building to collect their personal effects after retirement. Now, it's odd to me that that one metric and that one policy changed, especially since two other people from the same group left at the same time and had no issues entering the building. So sometimes I think the whims affect, like you guys are saying, what were you doing 3 weeks ago at 2 p.m.? I don't know. So there's the only thing that changes is that things change, and there never seems to be quite consistent adherence, and sometimes it depends on who you are, how closely that policy is adhered to or not.
Someone asked about being nervous to get involved because of retaliation. I can understand that fear. I don't advertise that I am trying to unionize or like being part of this, which is, think about what you will. I do try to speak with coworkers, but I live in Idaho, which is a very red state. And a lot of people, even in red states, will actually agree with progressive ideas if you avoid words that will like scare them, like union or anything that sounds progressive. So I don't really say
I can speak to this really well, actually. So I've been involved with the CBB here for going on 3 years. Like I joined Wells Fargo, was there for a year and realized we need a union. Like, that's how we're gonna fix this. And I did some research and some studying, and I realized that a lot of European banks, specifically in like Scandinavia, Germany area, are unionizing. And like those countries have better benefits by default, but with the unions, they're even better. So I reached out to a number of different unions, including CWA and CB, well, CB is not a union, but I also reached out to the CBB. And that's when I got in touch with Shannon. And she, when I first started, I was absolutely terrified of retaliation, especially since like I've known my boss longer than I've worked at Wells Fargo. He's one of my best friends. So like there's that conflict of interest there. But one thing Shannon has taught me and that I've learned is that the more public you are in these organizing actions, the safer you are, the more protected concerted action there is. Because the National Labor Relations Act, Section 7 covers what we can do. Being a part of this group is a form of protection. So I have been public many times. This is my second CBB webinar. I've been quoted on CBB's public Facebook page. I've been quoted in 2 articles. Third one is still pending. So I've been in the media. My name has been out there. I am sure Sharf knows my name by now. I'm the trans from Salem. We stick out. So, but they can't fire me for this. I'm 100% protected because we are doing this in concerted, protected activities. And the CBB is that protection. Just like if we can manage to get the votes and we can unionize at Wells Fargo, we will all have that protection in addition to the ability to negotiate for better wages, better working conditions, and better insurance and coverage. So I really hope that answers your question. And then we're gonna, I think, move on to the next question, which is staffing an issue with the entire company or only the retail branches specifically in Florida? That's a great question, but I don't know that we can say that. None of us are in Florida. I can say the call centers do typically have a pretty high turnover rate. But
I'm sorry.
Oh, go ahead, Emily.
Call centers in general tend to have a high turnover rate, but at least where I worked in the Boise location, Wells Fargo had a pretty low turnover rate, but that has been changing very rapidly recently. People are leaving, like people who have been with the bank a long time are leaving very quickly, like a lot of them. So make of that what you will.
Right. No, that is one thing I noticed when I came back from leave earlier this year is there's one other person in my new hire class from 2017 that still works at Wells Fargo. So in addition to like the quote unquote labor shortage that we're experiencing isn't because people don't want to work. It's because companies aren't paying enough. I can go to In-N-Out and work fast food for the same wage that I'm currently making at the world's third largest bank. So that's not to say that fast food workers don't deserve a living wage. They absolutely do. That's just to sort of underline the fact that we are not getting that living wage. And so when those unemployment benefits came out that were giving people more money than what they were getting paid, like they had to do what was best for them and their families. So it's not that people don't want to work necessarily, it's that they want to work for companies that care about them.
And if I could just add, you know, I know that the experience might be a little bit different for me, but we have issues with displacement. And they'll call it displacement because if you have securities registrations and some of these other licenses, it can affect it, like you disclose everything to the government. It can affect your employability from there. But it's not as if these people are displaced because they're in duplicative roles or something like that. I mean, sometimes that's true. Two people doing the same thing, somebody has to go. But a lot of it, at least what I've noticed with around me, is that somebody will be displaced and with maybe the $150,000 it took to pay that person, we'll bring in 3 contractors instead. And I know Charlie Scharf, coming from JP Morgan and Jamie Dimon's way of operating things, cost cutting is at the top a concern, and trimming down, you know, the amount that we spend on employees is a concern. So kind of like what they're saying, there's turnover at the contact centers and maybe in the retail branches, but it's also happening by a different name elsewhere. And it sometimes doesn't have much rhyme or reason to it. So there's that as well, especially if you're bringing in contractors right after.
Thank you. Juan, did you have anything you wanted to add to that?
No, I think everybody's kind of stole my thoughts.
It's almost like we all think alike. This next one looks like it's more of a comment than a question. From Ellie Harper. I'm in a retail branch in California and it's terrible. Been through 3 tellers in 6 months. We only have 2 tellers and 1 banker. Never seen it that bad. Yeah, that sounds terrible. So I would definitely recommend you get, you know, join us if you have the ability to, the want to make that change. We collectively, working with the CBB, have made a lot of changes, and we're just getting started.
Marina, like you were saying about getting a second job during the pandemic, I don't know a lot of people who don't have a second job or some kind of side gig. And that's not to put down what you've gone through, but it's not a lot of money.
Oh, yeah. Yeah, no. So my husband has PhD and works 2 jobs.
Yeah.
Like, we both have 2 jobs because people just want to pay what people are worth. It comes back to so many companies just put those profits over their people.
Sorry, I meant there are a lot of people in the world with second jobs, but I meant like specifically working at Wells Fargo, like coworkers.
Oh yeah, no, totally.
Mm-hmm. So. You have more questions?
Looks like we have a clarification on the previous question about that the staffing issue is a direct correlation of the working culture. And agree. When people realize that they have worth, they're gonna go to value them. And I think this pandemic has showed a lot of people that a lot of companies undervalue them, Wells Fargo included.
What they're saying about the retail locations as well, only having 2 tellers and 1 banker, that's obviously really terrible for the branch. And I'm really sorry that you have to deal with that. That does affect us in the call centers as well. And I don't want to, put down what you're going through or anything. But we get a lot of calls from people who are frustrated that they can't get into the branch. And it's like, the branch is all booked up and it's whatever. And it's like, and it's just another, it's stress on us. It's stress on the bankers. It's just a terrible thing. And it's like, I'm sorry. Everything is terrible. I don't know what to tell you, man. I'm sorry. I'll try my best, but it's not really something that I can fix. Everyone's doing their best.
Yeah.
So. I would just mention, even if you're afraid of retaliation, you can still reach out to any of us in this group, or because surprisingly, everything that we bring up, we've seen changes made because of it. It might not be publicized that it was us. I know the one big thing that I was always speaking of before was regarding our quarterly bonuses, how I was measured by my metrics, but then the quarterly bonus was done on a team basis. So I could excel, but then have a coworker that was just didn't care. They would average our scores up, and that's what we were paid. So when you have a team of 12, 15 people, well, you're letting other people determine your bonuses. And that some of those metrics did change. I did notice that because that's something that I was bringing up. Now it is based on my sole metrics. My teammates don't affect it anymore. So, coming to some of these meetings or even getting our emails, let us know what your concern is. I had coworkers that I've never met, but they knew that I was in that meeting with Schorf back in December, that were aware of it. They come to me, they voice their concerns. So just, speaking up, you can speak up anonymous and it's still, your voice can still be heard through one of us. And just to carry on the shortage, yeah, I've seen firsthand. I deal with branch managers now on some of the issues in my department where they normally wouldn't do any of this express in my department. That's personal bankers' responsibilities, but they're having to do it because they're so short-staffed. And it goes back to livable wages. Why are you going to stick around here if you can go somewhere else and get a better wage? Once we get a wage that's livable, you're going to get these employees that come back to stay with Wells Fargo, and help even promote, the bank. That's why most of us are here is we want to make Wells Fargo better. We want to be proud of, this is who we work for. They're willing to hear our voice and look forward, not all about that mighty dollar. And so that's why most of us are here, I'll admit I've kind of been blacklisted, and I've accepted that I probably won't promote much because of me speaking up for years. But I'm fine with that. I can go to bed knowing that I'm doing my part on a clear conscience, and that's the reason I'm out here speaking up on behalf of those who don't want to or afraid to.
And to sort of feedback off of what Juan said, he mentioned that we had a meeting with Charlie Scharf. We collectively with the CBB had been pushing before the pandemic even started to have an in-person sit-down meeting with the CEO, with Charles Scharf, to go over everything that we need and would like to see Wells Fargo be. He didn't come from Wells Fargo, he came from another bank. Maybe we can, put this in his head and we can actually work to get Wells Fargo better. Get to, like Juan said, so that we're not embarrassed to say that we were for this bank. And said this meeting, and several of us got to tell our stories. However, it that once we got to, it was your story, wasn't it, Juan, or was that Theodore? I think it was Theodore. One of our other CBB members, Theodore, once we got to his story, which was concerned with systemic racism, Mr. Scharf decided to end the meeting after agreeing to go an extra 15 minutes. So, if you will. But yeah, so we are able to get these meetings, or at least we were able to get one. We're trying for another. We'll see how that goes. So that we can really move heaven and earth, so to speak, at Wells Fargo. Looks like we've got another question here, and still work there. That's a good point. We've got another question here. Retail branches are scored through NPS. Many of the detractors are regarding the company. I have not been able to make bonus for 6 months. Customers are. You all believe this is fair?
No, definitely not.
No, I agree. Not fair.
Yeah.
My bonus is similar on NPS. One of my requirements is we have to have 10 customers call in on their survey on how well they were treated by me. If we don't get those 10 calls, doesn't matter what my other metrics, I don't get my bonus. And this last quarter, that's what happened. All my metrics were excelling. My annual review was, that I excelled, but because I only had 5 customers call in on, to score me, that caused me not to get my quarterly bonus this last quarter.
NPS has been, we have a similar system. We've had NPS where customers do the little surveys. Virtually all of the surveys Of course, I mean, that's not always the case, but almost all the time, if you get a negative survey, it's reflecting negatively on Wells Fargo and not you. I believe we used to have a way of disputing that, but not really anymore. I don't remember exactly the details, so I can't 100% vouch for that. But yeah, NPS is a huge deal and can affect your bonus. The way the bonuses are structured are very, very terrible. I personally haven't bonused in like 2 years in the 3 years that I've been working here. It's always something. Sorry, you got great numbers and everything else, and you're gonna do great in making sure your team gets your bonus, and I, the manager, get a good bonus. But you didn't meet this one metric, so sorry, this is how much your bonus would have been, but you're not getting it. So.
Yeah. And that the teams, at least in my call center, the team's overall NPS average is what sets the amount of the bonus. So like Juan was mentioning earlier, I can have amazing metrics, but if we have somebody that's bringing down the average for whatever reason, could be that they're a new hire, they don't even have their foot in the water quite yet. Not only does that person not get their bonus, the rest of us don't either. Or instead of, you know, us getting the top tier bonus, we're getting the lowest tier bonus, which is usually about a quarter of what you max out on. So the sort of long answer to your question there, no, I don't think any of us think that it's fair that these customers are upset with Wells Fargo as a whole, and our business is dependent on that rather than their personal interactions with us. And then we've got, looks like another comment here from Adriana Munoz. I work in a branch as a specialty banker, and I've been feeling much more pressure lately around sales results and closing of deals. It looks like they're going back to how it was in the past, even though they say we put our own goals. That's interesting. I've also heard rumors in my call center that we are bringing back sales at some point, but it's completely rumors at this point. It's been rumors since I started there in 2017, honestly. But I don't work in the branch. I'm not a branch banker or a specialty banker or personal banker. So that definitely sounds shady. And I'm kind of curious to know what you mean by we put our own goals. Do you make your own sales goals and then they tell you that they're not good enough, or how does that work?
That's interesting because we've closed so many products that we used to offer. And I'm not trying to say that you don't believe you. I don't believe you, because I do. It's just interesting because we have closed so many products that we used to offer, and I've gotten a lot of complaints about that. Like the home equity line of credit, and they've actually made us, when the pandemic started, they rerouted a lot of phone bankers who used to take like credit card applications by sales or whatever. They no longer did that. They would have to either apply online or go into a branch. And they kind of made us be in this weird middle ground where if a customer like wanted to open an account online, we might have to like walk them through the process. And it's not technically opening an account, where previously that was just sales job, but now there's no sales. So it's just this weird middle ground that we weren't uncomfortable with. That was a tangent, sorry. But yeah, I don't know what Wells Fargo is doing with sales. It's very strange.
I can say this, like at least from the strategy perspective, because obviously there was the whole sales practice scandal. And like I stated early on here, you know, there was a reorganization of the division in which I work. And the stated objective of the reorganization was to give more advisors quicker, more efficient, and streamlined access to more products. And now, obviously, as a securities registered but bank employee, my manager and myself, our ears pop up and we're like, what about Reg R? That whole thing with the Securities and Exchange Commission that says that you can't do it. And they're like, we're doing this. We have to give advisors more access to, products and this and that. So while it's not, it's kind of like that meme. It's like, say we're bringing back sales goals without saying we're bringing back sales goals, because it just has that feel, given the amount of strategy calls I'm involved with, and given the amount of, marketing material where literally we'll have an entire page of just like all of the products that you can have access to if you just come over here, and this person's going to refer you over here, and then this person's going to do this for you, and this person's going to do that. It definitely kind of has that feeling of we're back to quote unquote cross-selling again, but instead of using the no word of cross-selling, we're just going to say referral activity or something to that effect. So that's at least how I see it in a much more far removed view.
Yikes.
And we've got another one here. Branch goals are unrealistic. District managers are pushing all branches for investments and credit products. If you're not meeting one of this, you are usually in corrective action, in constant coaching calls, borderline harassing.
That sounds like sales goals to me.
That sounds like sales goals. It also sounds like a hostile work environment, or at least borderline it, which is
I didn't know about this.
Another great to get involved with the CBB. Because if they're pushing you that hard, like we need to bring that to light, so that we don't end up with another sales scandal. Because while the bank can survive it, I don't think many of us could. Okay.